welcome out to our show here, the Halftime Report presented by Tackle Trading here. It's Monday, 9/20/2021, and markets are under some distress here to start the week. We're going to break it all down technically and, get all the coaches' takes as to what is happening out there. Interesting news and speculation around a property developer in China, Evergrande, potentially, looking at a default on some of their loans. Markets are getting jittery about that. Got a Fed preview, got the Fed meeting this week with their two-day policy statement coming out on Wednesday as well. And we also got some technical analysis tests that have been happening on the S&P and other sectors. Got a full panel of coaches for you today. Let's bring them in one at a time. Matt, you first. How you doing today, sir?
I am definitely doing better than the marketplace. I'm fantastic, in the best mood I've ever been, if the comparison is the marketplace.
So in relative strength,
relative terms,
yeah.
If the RSI of the market is down here, I'm slightly above 50 with a good positive slope.
I see. And so when you measure it like that, definitely, I think I'm doing a lot better than the market as well.
I think everybody's doing better than the market right now.
Yeah. A lot better than the market here today. Mark, how are you doing, sir?
I am doing, listen, I'm entertained. Let's just put it that way. It has been a while since we've had price action that required more thought than buy the dip, right? So I enjoy these type of market conditions. My portfolio doesn't always enjoy these type of market conditions, but keeping a level head, executing a plan. It's all business on a day like today for me, and maybe this week could be very interesting. Got a lot of analysis from the team today.
Yeah, I got a lot we got to break down. We're going to get into it very shortly. By the way, if you're out there and you are now watching our show, hashtag Team Tackle right in the chat as we get the conversation started each and every day here in our YouTube channel. We got a couple things going on here at Tackle Trading of the day. I'll talk a little bit more about them tonight. Do not forget tonight's event, though, 8:30 p.m. Eastern. We are going to be live with a special webinar from Coach Matt on swing trading. Very, very important topic. Not a great
day to talk about swing trading. As an educator, I like teaching from live examples. I give educational information on PowerPoints and whatnot, and Christian does such a wonderful job of making those look very, very, very pretty. But I love teaching from actual live charts. That's just how I like doing it. And not a lot of great bullish retracements or breakouts today to use as case studies for no doubt. But we're going to have fun here tonight, and I'm going to definitely teach you the concepts that are very important to swing traders, and that's really kind of three things. And it's pertaining today when trends shift, patterns get violated, and so on and so forth. We'll break that down from a technical perspective here in just one moment. But when you're looking at the three major concepts of any swing trader, and again, there's a lot of nuances to this, but number one, you got to identify trends. That's number one. Number two, you got to identify the pattern. And then number three, you got to have the understanding of support and resistance. And so tonight, we're going to do about an hour webinar on those three major topics in trend identification, pattern recognition, and the concepts of support and resistance. And we're going to have some fun. Obviously, for Team Tackle, you guys have heard this a few times from me in terms of the teaching of the basic concepts of this, but I always feel it's a good reminder. So would love everybody to show up and have some fun, and let's have a great webinar tonight. But until then, we got a lot to talk about today.
We do got a lot to talk about today. I will give you guys a reminder as well tonight. I dropped a link directly to where that webinar will be in our chat here, guys. If you want to just subscribe or make sure you have that bookmarked, we'll go live 8:30 Eastern. Let's get down to the markets, though. We got to talk about what's happening here, Matt. Let's start from a technical perspective. We'll talk about the news here in just a minute because this thing has been weakening, not just today. I mean, it was weakening throughout the overnight session on Friday. I mean, what are you seeing here from a technical analysis perspective?
Well, when markets violate any pattern or any trend, I have a tendency to live on intraday charts because that's where everything happens. All the trend analysis, all the intraday, when you're looking at truly buying the dips, situations like that, you just shorten your time frames. Basically, when volatility hits the market, the pattern's very quick for us. Number one, you shorten your time frames and you get a little bit more conservative on all entries, stop loss placement. You tighten position size. Instead of going to a full position size, you reduce it to half, you reduce it to a quarter. Or, for some traders, they're just like, I don't love the volatility. I'm going to wait for the market to be a little bit more consistent, and I'm going to go on vacation. whatever the protocols are for you to actually act in times of volatility, I do think the intraday chart does tell the story here. And when you're looking at this marketplace over the last, say from Friday till today, it truly has been a fascinating market, because I feel like even though we had a nice little 2-day stretch where the markets were closed, I feel like this was just one 24-hour cycle, quite frankly, where we didn't see increasing volatility, but similar volatility. When you're looking at what on Friday here, first we start with the violation of support right there. You look at this from a neutrality perspective. Remember, all week long last week, coming back out to the daily chart very quickly, all week last week, we're looking at this scenario between the 20 and the 50, the 20 and the 50, 20 and the 50. Snap back, come back down, snap back, come back down, snap back, come back down, up and down, just tight little K-trade scenario. You look at that from last week, and when we're looking at that, you see that 44.80 zone really never got punctured, never saw that buyers come in. And then the same thing can be said of 44.30 to 44.40. Support came in, support came in, support came in. And so you're really looking at that from a K-trade scenario. And when we got done with the halftime report on Friday, you know, we were getting ready for the scouting report meeting, and I remember getting into the scouting report meeting, and we're all looking at this violation right here at 44.30, and for 2 straight hours, we're just sitting there talking about the violation, talking about what could actually transpire here, and everything was fine. It wasn't really craziness up until the actual close on Friday, and on the close on Friday, the futures market is still rolling for an hour. The stock market might close, future market's still rocking. And so what happened was very telling here. When you see that close on Friday, right coming into these ranges here, all of a sudden you started seeing more selling after the actual stock market close here, and it violated your support level. And when you couple that with the daily chart, what you see now is a violation of the 50-day moving average. You break down out of your support level that tried to build over the last 4 trading days. It violated that as well. And then what was fascinating for me is even in the face of that violation on Friday after the close, the market doesn't do a thing. Not even in the futures market open on Sunday. When you look at the futures market open on Sunday, that is right here. This is the selling after the close on Friday. That's the violation of support there at 44.20. You see that violation, it comes down. Here's the futures market on Sunday, guys. Now, I get it. I get that we are all talking about China today. I completely understand that. I'm concerned about the Evergrande situation. I think many traders are concerned about the massive property company, real estate company out of China, and what their $300 billion in debt represents from a contagion perspective. I'm concerned about that as well. But that news story has been going on for a few days now, and for 2 days over the weekend, nothing transpired. Nothing transpired. You see a futures market open here, it simply comes into resistance, confirms down. Comes into resistance, confirms down. Look at the cash opens here. This is the US cash open. This is the following day's Asian cash open. Here is your European cash open. And so what I'm really seeing from a technical perspective is something I see honestly, quite frankly, a lot of times when the U.S. markets do turn down, whether it's on a Monday, a Tuesday, a Wednesday, a Thursday, or a Friday. When the U.S. markets violate a support level, what typically does transpire is the rest of the world will do that over the next 24-hour cycle as well. That's what we're seeing here today, is you're seeing what the U.S. markets did on Friday spill over into the European markets. That drives the futures markets down. It spills over into the Asian markets. That drives the market down more. And then when you're looking at this just today, you see the market come here. It gave it a go. It did. It gave it a go. It got snuffed out, and you're still walking down the stairs here. This is an environment, for me anyways, this is an environment where I am seeing this as a technical situation where the levees did break, and now you are walking down the stairs from an intraday perspective until you get some degree of clarity. And that clarity has to come from some major storylines that are happening that are creating a tremendous amount of uncertainty to the marketplace. And so when you're looking at this from a technical perspective, I see this as you're walking down the stairs, walking down the stairs, walking down the stairs. We need to see, absolutely, we need to see intraday analysis start to come in. We have to see those buyers start to come in. You have to see support start to build in these environments, and we just simply have not seen that yet. And so when you're talking about the major storylines today, what I personally feel is that what they truly represent is a massive uncertainty right now, a massive uncertainty right now. When you're talking about the Evergrande situation with China, the uncertainty of what that represents from a global situation. And if you want to think about the Evergrande situation to make this more US based, guys, we're going through the 13th anniversary of Lehman Brothers. When Lehman Brothers went belly up in September of 2008, not everybody, including us, understood what that truly represented to the United States financial situation at the time. We knew it was concerning. Obviously, we knew it was concerning. That anybody who lived through the subprime meltdown know how concerning that was. Obviously, that goes without saying. Everybody knew it was concerning. We didn't know exactly what that situation represented to the U.S. financial stability in general. And so I do feel on the 13th anniversary of Lehman Brothers, the Evergrande situation out of China simply brings back some of those ghostly memories of the Lehman Brothers situation, what that manifested and represented to the U.S. economy, to the stability of the United States financial systems, and so on and so forth. Personally, if I had to, gun to head and you had to pick, I think China bails them out, but they haven't done it yet. You need to see some degree of clarity. You need to see some degree of clarity out of that situation before I believe the market starts to get a little bit more confidence, because the market does feel very jittery right now. When you're looking at the landscape this week, outside of the one storyline we're all talking about today is the Evergrande situation out of China, but this is a week, honestly, where we're going to be talking a lot about central bank action. You have the Bank of England here, you have the Bank of Japan tonight. Now, the Bank of Japan are expected to maintain monetary policy. They're expected to maintain negative 0.1% on their short-term interest rate, and I believe 0% on the 10-year note. You have the Bank of England on Thursday, and then you have the big dog of them all on Wednesday with Jay Powell giving a special speech on Friday. It does look like tapering's in our future, and so we need to see some clarity. There as well. But outside of that, you also have Janet Yellen throwing nukes in the Wall Street Journal over the weekend saying, if you don't suspend the debt ceiling next month, we're risking financial calamity. And so you have this environment where on Friday, you violate intraday support, which that couples it, again, you violate intraday support, you look at the daily, that violates that 50-day moving average. When you look at the past, that 50-day moving average has been a line in the sand, guys. It just simply has been that line in the sand. That violates everything about that line in the sand. In that environment, you have a massive dose of uncertainty in the market. For me, when I'm looking at this environment, I need to see two things. Number one, I need to see intraday support start to build. I need to see intraday bullish trends start to develop before I personally feel confidence as a bullish trader in this environment. The second thing I need to see is from a big picture perspective, we need to see clarity out of the central bank this week. We need to see clarity and confidence out of the central bank this week. And right now, they have been asleep at the wheel for 2 consecutive months. We need to see clarity and confidence coming out of the central bank this week. We need to see that. We need to navigate that this week. We need to see some clarity out of the Evergrande situation as well. And most likely, these will happen simultaneously as you start to see a little bit more clarity coming through from these major storylines the market is navigating this week to that, couple that with the intraday perspective. Right now, we just simply have not seen that. You see it even today from an intraday perspective. You're walking down the stairs, you're walking down the stairs, you're walking down the stairs. You really haven't seen any shifts in volatility. Again, outside of a 30-minute time frame here, you just see the very consistent price action. And, and excuse me, yet again, what happens intraday? You violate. The pain's not over, guys.
You break below support on the intraday. You've got a downtrend on the intraday. You break support on the daily. You've got all kinds of concern here from a charting perspective. Is there any reprieve here on the technicals yet, Matt? I mean, is the weekly giving us any kind of potential place that it might end? Because I want to get to the news and talk more about that in a second. Just one last thought on those technicals. Yeah.
Historically, we may look at the 20 weekly here and say, yeah, it acted as a support level, right? But it's Monday morning. And it's a long week.
That's a big theoretical bet, right?
That's right. Let's talk Evergrande.
This was the cash open on the week. We got a long week to go on that. But again, if the weekly holds, it starts with intraday analysis, guys. So yeah, we could look at the weekly chart and we can say, yeah, it's been a great run. There's no doubt about that. But the open question is that run over? And I think you got it. And yes, you can rest some hope on the weekly chart. But again, it's Monday morning. We haven't seen any of the three central banks report this week. You just had Janet Yellen throw a nuke in the Wall Street Journal yesterday, and everybody and their dog is talking about contagion, out of China. So yeah, the weekly chart might give you a little reprieve today, but for me, everything starts on the intraday.
How many new traders are Googling what define contagion for the first time?
That's why I just said Lehman Brothers, because that we all kind of know what Lehman Brothers represented.
Well, and one of the risks in the Evergrande situation, obviously, like you were talking to me and Mark earlier, Matt, in pre-production, is the fact that we just have so much lack of clarity as to what is happening there, what it means, and what the implications are, right? You read all these stories about contagion. You hear people talking about comparisons to Lehman Brothers. It's going to get you a little bit jittery. Mark, they have a debt payment due on Thursday. This is a 300.
They had one due today, too.
They're not making that payment.
They're not making that one either.
Yeah.
They need bailout money from China.
Oh, Evergrande's done without government assistance. Just there's a lot of bullish catalysts that could emerge this week. Congress could pass, a spending bill. They could lift the debt ceiling. Jay Powell could come out and say, let's push off. I mean, there's all kinds of bullish catalysts that could happen. But Evergrande resolving its own issues is not one of them.
Well, and honestly, I don't think you need positive clarity out of every situation for the market to start getting a little bit more confidence right now. I think you need some clarity out of something, right? I mean, that's where I'm looking at. Give us something to hang our hat on with the central bank this week. Give us something to hang our hat on with some progress from a debt ceiling perspective. And don't take it to the final hour. We don't need the political games right now. We don't need that. We don't need the political games. We know exactly what's going to happen. You're going to yell and scream at each other, and you're going to raise the debt ceiling the same way you've done it forever. Forever. The debt ceiling is not a political issue to me, by the way. Every party raises the debt ceiling. And so it's just a matter of, this is not an environment where politics should impact. That's all I wanted to say there. A little soapbox moment.
Well, and I think that, that could be one path to a positive change in some of the sentiment here, obviously. Mark, you described this as a wall of worry right now, how every one of these different issues that Matt is talking about has their own place in building that wall of worry for investors. Which ones are you most concerned about, Mark? Which ones do you think that could be resolved soonest as well? Yeah.
All right. Yeah. And if you don't know what a wall of worry is, it's actually a pretty common stock market trading phrase, right? I mean, just think about a wall. Every worry is a different brick. And the thing about it is, when you take a brick out, it reduces the stability of a wall, right? And same thing with the wall of worry. If you take one out, then that. So the question is, rank the actual worries in the wall. What are the biggest brick? For me, it's Evergrande number one. I think that is, if you got China coming in, inserting liquidity in their market, which is their probably biggest way to address the contagion issue without bailing out Evergrande specifically. That would you could see markets respond to Chinese action very, very favorably. I think that's the biggest. The uncertainty around the Fed, right? Taper schmaper, this and that. Bad optics with the Fed selling at the top. of the
That
market.
that was bad last week.
You know, and listen, I mean, listen, that is getting more mention on message boards than Evergrande right now, just because
think about
people
it, Chucky.
are pissed off.
Well, think about it. The Fed comes out last week and like, hey guys, we're going to do you a solid, right? We know that you're concerned about our transparency. So what we're going to do is we're going to dump all of our holdings right before we announce tapering and right before the market pulls back for the first time in a year and a half. Like the timing of it just maybe it's altruistic and everybody's just doing things on the up and up, and I'm perfectly open to that, but bad optics and terrible timing. I mean, at the end of the day, it might just be terrible timing, but still, I don't know. I'm certainly not a Fed apologist, so I always put the conspiracy hat on when it comes to the Fed, but could just be bad timing.
And I don't think, while the debt signaling isn't I think higher for me, because I think everyone believes that it will get done because it always does, right? But just even removing that brick, I think could create, in oversold technical conditions, all you got to do is get an umph and then things can feed off itself, right? So, China won for me.
Oh, go ahead, Mark.
Fed uncertainty number 2. And if you have catalysts along those lines this week, then that will, particularly China, would prop up the market. But really, any positive news could create an intraday rally. I mean, I'd be really surprised if we have 5 straight down days this week. That doesn't mean you go buy the rally, right? You might use it as a way to restructure your portfolio because, there's other bricks, but that's how I would rank them right now.
So you've got China, then you've got the Fed, then you've got the debt ceiling in
basically everything else.
Gotcha. And then everything else kind of just right behind it. Well, we could use some clarity out of any of those issues and maybe start to turn it. And maybe that does give us some
in the short term.
Reprieve. Yeah.
In the short term, I'd rank them China, debt, then the Fed. I feel the Fed's been asleep at the wheel. I don't have a different take this week than I did last week. I kind of feel they're going to do the exact same thing. So I think we need to see some clarity there this week. We need to kind of get through this Fed announcement this week, given the fact that every one of us market participants have been looking at September for the Fed from a tapering perspective for 6 months now. Mm-hmm. And so I think we need to get through that. But once we do, we're going to be looking at the Fed's actions in 6 weeks from now, in 3 months from now, in a year from now. And so I would rank the Fed last in that, but for me, if you want to see, if you're looking at the market and you're saying, what is that one catalyst that could stop the pain right now? I do think it's positive news on China.
Yeah.
Because that's the worry. That's the start of the worry about what that represents to other industries.
And it's so encouraging because there's been so much positive news out of China.
Yeah, who trusts China right now?
Right?
Anybody? So,
that's getting one that bought the dip on Baba, how much they trust China.
It's true. It's true. I mean, China has not exactly, I don't know if anybody has an accurate read of exactly what China's end game here is.
I don't think we know what they're going to do.
And that's the concern, is what is the end game and how far are they willing to push this regulatory situations? How far are they willing to risk, their property situation? So it's just, it is a worry right now. And I do, again, believe we do need to see a little bit of clarity, and that can come quick, guys. Markets do respond quick to this. Mm-hmm. And so I come back to it and I say, all of that wall of worry, I know it's in the back of our head. I know it's in the back of our mind. I know it's driving the market right now. That's why I'm going to live on this intraday chart, and I'm going to wait to find support build, double bottoms type scenario. And then at that point, and again, I say this all the time when it comes to buy the dip, it's fine. You never buy when it's going down, though. You wait for it to really kind of find solid ground, and then you start pushing those chips in. Right now, you still got to sell, and it's continuing here today.
Mm-hmm. Yeah, at least for one day, everything's the underbelly, right?
It feels that way.
Yeah,
it does feel that way today.
Under pressure across the board. There's not many companies even in the green here today. So it's a broad-based sell-off, technical sell from a market perspective. And on the Evergrande thing, I'm with you guys. I think it's the number one because we just do not know what the PBOC is going to do with liquidity. They have not given a signal. There was even a report out of the state-run media on Friday that they were telling Evergrande, don't assume you're too big to automatically get a bailout. You're not too big to fail, essentially is what they were trying to tell them. So we'll see if we can get some clarity out of Evergrande this week.
I would like to ask the PBOC, are you too big to fail?
No.
I'd like to ask them that.
That's a great question, because what are we talking about from a risk perspective if this does spill into other
That company,
things?
guys, we're talking about 300
Billion in
billion
debt.
in debt.
Mhm.
You're telling me some of those officials don't own some of that debt?
Yeah.
Listen,
No, they
John
have-
McCain in the 2008 election, when Lehman and everything was starting to unfold, was very against government bailouts. He was on the campaign, we're not going to bail, until someone sat John McCain down and showed him the systematic risk.
This is what the House of Cards looks like if you don't. Right?
And all of a sudden, John McCain, who was, I believe, a wonderful human being and a great American, I love John McCain, he said, ideology is one thing, families and the whole system collapsing is another. And he's like, we have to, I mean, it's just the way, and we can address what this means later, but we have to stop the systematic risk now.
Personally, I would not put what's happening with Evergreen on the level of Lehman.
No, neither would I.
I just feel like sometimes when these events happen, it sparks those ultimate concerns.
Mhm.
Right.
I think that's what's happening the last couple of days.
Yeah. All right. Let's keep taking a look at what's happening here technically then, Maddie. Why don't we take a flash through the different indexes? I know we want to do a sector roundup here today, because that's obviously going to be a lot of where the story is happening as well. What are you seeing?
You're going to see a similar read, obviously, today versus a lot of the other sell-offs we've seen in the market were not broad-based. They were theme-based, and you saw rotation. Today really is an all-sell day type scenario where every sector is going down. It's a matter of what recovers sooner. And so when you're looking at the market indexes, you're going to see that reflected in most market indexes here today, as that selling begets selling, and it happens in every industry, it happens in every sector, and it certainly happens in every index as well. The S&P, and by the way, the S&P, we are now looking, what are we talking, percentage decline from the top, 45.50 to 43.20. You're talking in the 5% ballpark, right? At this point. And so this is the first 5% sell-off we've had in the market for, I believe, what was it, 200 and some odd trading days. And so, and it really kind of goes back to the last one we had about 2016. We had 400 straight trading days without a 5% sell-off. So the market's been very good for quite some time, but we are now looking at that correction type scenario in the broad markets. When you're looking at the S&P, violation of the 50-day moving average, we've looked at the intraday scenarios where you see that just walking down the steps. And again, guys, I keep coming back to this 15-minute chart, this 30-minute chart. I don't see random acts of violence here, guys. I don't see random acts of volatility. I see methodical downward movements in price. I'm looking at this from a technical perspective, once again saying, where can support form? Right now, we do not know where that's going to be. I'm saying that as a technician. When you look at it from a daily perspective, you've basically broken through all your moving averages on the daily perspective. You do have some fairly decent support right there at about 4,200 by 4,240. You could see some selling go into that range, but that's really the last support level you have on the daily level, especially if this weekly channel breaks. You can really see that support level around that 4,200 to 4,240 level, old resistance before that nice breakout on the weekly chart. You could see that coming down as a support level, but again, all that's hypothetical until you start seeing support form on the chart. And again, I'm going to talk about support tonight in our webinar, but support is only defined by the actual marketplace, and the definition is an upward movement of price following a support bounce. And so you have what is called technical catalysts that can act as a support level. Right now, with where this market is on the weekly chart, with the violations on the daily, and couple that with the weekly violation of the 20-period moving average right now, there's just not a lot of support on the daily or the weekly chart until you start getting into that 2240, 2250 zone where the old breakout channel is. So that's number one. And that's why I come back to the daily chart and I say, well, guys, there's just no support here. One of the reasons you see these types of volatility here is once the dam does break, i.e. the 50-day moving average, where's the trader supposed to look at to the left of the chart and say, oh, Yeah, it's going to stop right there at 4,300. No, 4,300 has no historical relevance at all from a technical perspective. And so that's why I keep saying I'm going to live on that intraday chart, because that's where you start to see support form as it is defined by the actual marketplace. Support becomes really powerful when you couple it with what is known as technical catalysts that can act as support where the market starts to price in certain things. Right now, we just do not have that. So we do not have a support level that really can attract buyers until you start seeing that 4240, 4250 zone, which is the top end of the weekly breakout channel over here in April and May. So that's first and foremost in the S&P. When you come back down to the other indexes, the Russell 2000 had its chance, like it's had a few times over the last 8 months. It's failed its chance at this point. I liked it all the way through this pullback, But one thing, never confirmed, just never confirmed. Today, violated everything. You are right back into the same degree of trend and pattern you've been in for the course for the better part of the last 8 months. You see the wide range neutrality. 200-day moving average certainly had multiple opportunities to be that catalyst. It is now no longer that catalyst, so you're back into wide range neutrality in the Russell 2000. When you're looking at the NASDAQ, a little bit of relative strength here today, or relative weakness, I should say. NASDAQ also, and again, what's happening in the NASDAQ, a little bit relative weakness in comparison to some of the other indexes, is you were just coming from a stronger point, is all you were doing.
Exactly.
That's the only thing I see here. Remember, the S&P was coming from the 50, the NASDAQ's coming from a higher point. It's just playing a little bit of catch up against the S&P. Now, unlike the S&P though, I am looking at this 1475 level. You see it as an old support level, couple that with the 50-day moving average. You do have that. Underneath that, you're looking at 14,500, and underneath that, you're not looking at anything to about 14,000. So we do have some support ranges on the NASDAQ itself that could act as a support level, but once again, you got to see it. You got to see it. This is not a market where you're like, hey, I love this zone. I love this this support level. I'm looking to buy the dip on that support level. I do think we're in a market condition where confirmation and intraday analysis is very key right now. And so I think you got to see those intraday levels of support start to come in. And then when you're looking at the Dow Jones, obviously the Dow Jones has been one of the weaker areas of the market relative to the S&P, relative to the NASDAQ. And so again, when you're looking at kind of what's happening, you see a very similar price response in the Dow Jones. The difference is it was weaker than the rest of the indexes. So when you're looking at this from a support level, unlike the S&P, unlike the NASDAQ, which still has a massive distance to the downside before it gets to the 200-day moving average, you're looking at a Dow Jones right now where you're only about 300 points. And again, we're down over 500 points just today, guys, so far. You're about 300 points from that very, very key level of support right there at that 200-day moving average, which is slightly north of that $33,000 significant whole number. And so when you're looking at the major indexes, you certainly see selling right now in all indexes. This is an all sell day to a certain extent, given the fact that all indexes, all sectors are all showing selling behavior. What can you look at from a technical perspective to see a little bit of this damage being mitigated? I don't see a lot to hang your hat on, quite frankly, until intraday analysis starts to form on the S&P, on the NASDAQ. On the Dow Jones, though, again, we can see rotation happening when it does. Right now, what I'm looking at is for support to start forming, number one. What index starts to form it quickest? Where does that couple from a daily and a weekly perspective? And I know the Dow's been underperforming against the rest of the broad market for the better part of the last few months. But again, when you're looking at where support could build and you're seeing, okay, on the Russell 2000, yeah, we're looking at 2100. We've been looking at 2100 for a very long time. You're still looking at 2100. But again, that doesn't change the overall trend and pattern there. You're just looking at that as a historical bounce, pretty tight against that. When you're looking at the NASDAQ, there's just a distance. You see the distance here, guys, and there's not a lot of support underneath right now. And so you see that distance there. You could see that selling continue a little bit When you're looking at the S&P, a little bit of the same. You see that distance between the 200-day moving average and the recent violation of the 50. Again, you could see selling happen all the way down into those ranges. Dow Jones, I think the first test you're going to see from a major market index is the Dow Jones on the 200-day moving average, and that's the first catalyst that I personally see that could stop the pain in the market.
Mm-hmm. You know, and appreciate that roundup on all the broad indexes there, Matt, obviously. And I'm looking across the commodities and other markets as well, including Bitcoin. I'm not seeing much reprieve in many different areas. There's a couple of them. I do want to flash through some of those, talk a little bit about them. Bitcoin first here. It took it on the chin in risk off fashion here today.
When a day is concerning and it reminds you of Lehman Brothers, there's not a sector that's going to be spared in that.
Yeah. Well, I mean, even you think back in COVID, right? You know, I mean, when you think about like safety assets and gold, right? Safety assets, first thing that come to mind, gold, right? I mean, gold had some vicious down days in COVID when you get this sell. I mean, what did Keith King say on the podcast, Trading Justice podcast about a month ago? Like in 2008, brokers would just be throwing everything out the window, right? Didn't matter if it was a great stock. I mean, these sell days, you know, you get downward pressure, you know, in multiple assets, multiple areas, you know, sell first, buy, you know, reevaluate later, what a lot of people do.
Yeah. Yeah. All right. Maddie, you want to flash through the commodities for next, or you want to go sectors?
Yeah, let's take a look at the commodities very quickly. Gold, if you want to talk about something that is finding a little bit of support here today, it would be gold. And you're seeing that support come in right here around that 1750 level. That does coincide a little bit technically with some old resistance and support levels. You see the old resistance zone, support zone, obviously a very volatile violation here of that support zone. But you see that building again right there. And again, I don't think this is like a environment where, oh man, we're looking to buy any dip on gold here. No, I think you're still navigating the recent violation, and I still think you're writing covered calls. But man, this is what we talked about all week long last week in the halftime report. K-trade scenarios in the marketplace, locking down those risk graphs, downgrades in from a sector perspective. It's just a matter of what forms those support levels. And guys, I don't think this is a Lehman Brothers scenario. I'm looking for support to build. That's what I'm looking for, support to build. But at the same time, you got to respect the volatility and the complete lack of direction this market has right now.
Absolutely. Yeah, you have to. And you have to see something develop on those charts like you've been talking about here all day. Gold's getting the first day of potentially that. Another interesting chart for me, Matt, is crude oil.
Yeah, but even on a day where, and again, the markets are only down 2% right now, but even on that day, think about this from a gold perspective, guys. Even on that day, you couldn't puncture intraday resistance levels.
Haven't broke out yet. Yeah.
You couldn't violate intraday resistance levels on an all-sell day. This isn't a pickup day for gold, in my opinion.
Just trying to find something down there.
No, this is a day you just enjoy gold in your portfolio.
Just glad that it's finding some support. That makes sense. What about oil here, Matt? You know, what do you? I like
oil. Nice little snapback coming into 70. That's going to be interesting because energy's taking it on its chin here today. But again, you can see some scenarios in energy specifically as pertaining to crude oil. Look at this nice little flag-based pattern. Again, all sell day, but not every picture is the same. You see the sell comes right back down into a very, very strong level of support called the 50-day moving average. See the smiley face? See that little 20 period cross into the 50 period right there? That's a nice little buyer zone right around the $70 mark. And it's not surprising to me to see the buyers at 70. You see it coming in right here. See those buyers come in with some fervor earlier today, drove that price up. Obviously, crude's been a little volatile since the trading day started here today, as the rest of the market did. But once again, what do you see? You come back to the rest of the market. It tried that recover. Look at that. It tried that recovery. Got snuffed out, violated. Crude oil, it tried that recovery and never violated support. You're seeing a little bit of relative strength. And this is what I talk about with support starting to build. It's this intraday analysis that leads to support actually forming. And so you see it start to build right here at 70. You could get a double bottom scenario here at 70. You couple that with some old support levels at 70 as well. You can certainly see traders looking at 70 and saying that is a level I'm willing to acquire here. But Again, this is a doji. You need to see a doji here to confirm that. Again, we're just seeing volatility from an intraday perspective, but that's what you see as support starts to build. You see the battle start to form. You couple that with your daily analysis, and your daily analysis is you like this. You like the zone around 70. You just got to see those buyers come back in.
No, I mean, isn't it? I mean, days like today aren't the interesting day, because like when this pressure builds sell, I mean, it seems to take everything. But like, and maybe we have an all sell day tomorrow as well, right?
You certainly could.
You never know.
Yeah.
But eventually, when things start petering out, even if the market's going down, you see counter rallies. Maybe not in the market as a whole, maybe not, but in certain areas where there's relative strength. And it's hard to get a good gauge of that on a day like today because there's so much pressure everywhere. But like you start to see those things develop. Where something, I mean, like I think about last year on COVID after the big, huge sell-off. Certain companies started outperforming lots earlier than others, right?
Mm-hmm.
Where money gravitated into. It will be interesting to see in the coming days what areas show that relative strength.
We're very familiar with the COVID playbook. And I am looking forward to executing that from an intraday perspective. But to go on what you said, Mark, days like today, nobody enjoys, I would say, right? Nobody loves waking up and looking at their portfolio down or their trades down or, the trades they were looking at making, never confirming and, all of that. Nobody enjoys that. I will tell you, though, when it comes to this type of volatility as a trader, I love analyzing and figuring out where those buyers are coming back in, though. And so when you're looking at this market here, again, you're just seeing the continuation of everything we started seeing last Friday. That has not subsided, but it will. It always does. And the reality is you want to be prepared when it does. And that's why I keep saying, I'm going to live on intraday charts. I'm going to live on intraday charts. I know the backdrop of the weekly charts. I don't need to see them to understand what I need to see on the 15-minute chart, the 30-minute chart, the hourly chart. That's where support is built from a daily perspective, is you always see it from an intraday perspective first. We have yet to see it today. And so that's why I say you certainly could see more follow through here. There is no doubt about that. But when we do see it, it's going to start on that intraday chart in my perspective. And that's always going to be slowing momentum, double bottom, or V-shaped recovery from a pandemic perspective.
Is the core of trend pattern and technical analysis, right? You have to start in that intraday level to make sure that you do have slowing momentum in trend on that intraday. It will have to build on its own. And like you always say, Matt, you got to let the market show that to you. The market determines that, not us. So we have to just watch it and read it. Yeah.
We have no desire for us to put the bottom in the market.
No,
we want Goldman Sachs
to
put the bottom in the market. We want Lehman. I about said Lehman. Holy cow. We want those big major financial firms, the hedge funds, the institutions. You want to see volume start to pick up on support starting to build. Right now, you have a downward moving condition with an increasing volume. This is not a pretty picture for the market right now. But again, it's always like this when you see major violations. You always see increasing volatility. It always sparks the fear. But again, think about trading. Trading is we're not trading just for today. You want to be a trader for the rest of your life. This is a long game we call trading. Today, it's just a day of navigation where we absolutely fundamentally need to see support start to build. Right now, we just haven't seen it yet.
Hey, Matt, while Lehman will not put a bottom in our universe, in a parallel universe,
listen, I'm all about that.
Like in the Fringe universe,
Lehman's coming back from the dead.
They will be putting a bottom in.
That would have been a good Fringe episode, actually. No, I got Lehman on my. It's 13th anniversary. I got Lehman on my mind, and plus the Evergrande situation does remind me a little bit about it. But yeah, they're not saving the day though. Lehman's not coming back.
Not today, they're not. No doubt about that. All right, very good. Let's flash through the sectors here next, Matt. Obviously, because you're talking about we need to find support, intraday support. A lot of these sectors under pressure as well. By the way, over at Tackle Trading.
Oh, go ahead.
We did give 7 different sectors either slight or moderate downgrades in the last week, by the way, just as charts have been developing and changing. We actually downgraded the market as well, 10 points. We've kind of been watching these technicals play themselves out. Here on a Monday, we're selling sharply. Which areas of the sectors you want to start? Maybe with growth and kind of take a look at those top end ones?
Well, a couple things very quickly. When you're looking at the sector rankings, you can see us downgrading a lot of the sectors. But again, we've been downgrading some of these sectors over the last 3-4 weeks, though. So definitely, if you haven't been doing so, make sure you're watching the newsletter. That kind of gives our official rankings on all the sectors. And as you can see, guys, the simple reality is most of the market is in some degree of neutrality and has been into some degree of neutrality for quite some time. You see the big downgrade on the S&P 500. Honestly, guys, we weren't expecting to downgrade as much as we did in the S&P. We did do a 10-point downgrade, but we were only looking at a 5-point downgrade. We actually put it in pencil because typically what we do is we'll rank it and then we'll reassess when the market closes because we rank kind of right about an hour before the market closes. Well, with the market close on Friday, we actually adjusted it another 5 points. Given that 10-point downgrade, you just got to respect any time daily charts are violated. And once that was violated on Friday, you saw the big downgrade in the S&P that follows. We've talked enough about the S&P, but when you're looking at the sectors out there, let's take a look at them one by one. We'll talk about the growth sectors first. When you're looking at technology, another 10-point downgrade, currently ranked at 25. Obviously, that would be even a bigger downgrade if you saw kind of what today was going to happen. You see the violation. Again, when you're looking at the tech sector, we're looking at this 150 by 150 level, old support over here, a lot of chop over there at 150. Can it act as support? Don't know. We need to see it really kind of form in the market and then see it start to form in the sectors. You see the gap down, that's based on the futures price. Not a lot of buying here, just sell, 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 sell on a fade type action. Technology definitely needs to see support coming in. Right now, we just simply have not seen it. When you're looking at its twin sister, the communication sector, very similar. You see the gap down, sell down type scenario. In the communication sector, you see a very similar violation of the 50-day moving average here. The communication sector is ranked very similar to the technology sector right there at the 25 handle. Would have got a little bit of a bigger downgrade. Again, we didn't see that on Friday. You're hugging the 50. We downgrade because of the weakness. You would see an additional downgrade with the violation here today. When you're looking at the discretionary scenario, obviously we were looking at that 185, 185, 60 level as a potential breakout. Loved that breakout. That got snuffed out. Just simply put, that got snuffed out here today. Violation of all your moving averages. It now needs to reset the entire trend in my opinion. And so you could see support coming in right now. You could see it right down around 175. Don't know. Once again, you're looking at a gap down, sell down scenario as you gap down underneath the 181 support level, and then you sell down. Got to see that volatility subside a little bit in the discretionary space. And again, a lot of this is going to be coupled with those major news stories and getting a little bit of clarity on those major storylines that are happening here today. What is interesting in these sectors is, for me, and again, a lot of bullish trades triggers just got blown out of the water today. But for me, when these environments hit, it's about reassessing the situation, updating certain triggers, looking at those watch lists to see if they still held their trend, held their pattern. You take an example like Netflix in the communication space here. Netflix down big on the day the same way everything else is down big on the day, down about 2.5%. But it's not down relatively more than anything else is in the market. You're testing support. The question on Netflix that I personally have is, does today blow up that trend that has been developing over the course of the last month and a half with good momentum behind it? And you know what? It may come down into the 560 level. No doubt that would blow this up, but we don't know yet. You see that big movement to the downside, but technically I wouldn't say that is confirmed a violation of support. If we recover, I still think that lines up the next Netflix trade. And so with Netflix, just as an example here, you got to still like the momentum behind the trend. You got to like support around 575 building. You just don't like what's happening here today as you see the not a really a gap down, guys. Tried to test going up on the open, came down, and now you're fighting for that 575 support level. And so for me, if 575 holds on Netflix, for example, I still think this trade is a legitimate trade, but it starts with it holding. When you take a look at ADI, another example from the I believe it was on the options report this past weekend. When you're looking at ADI, we were looking at this as a potential breakout. When you look at it on the weekly chart, you see that nice consolidation at the top end of the channel. We're looking at as a potential breakout. Now, I think what you do is you update this to a front-running bullish retracement. So when you're looking at this from a build, you see that cluster of moving averages start to form between the rising 20 and the 50. You see this as a higher high in the short term, and you're looking at this as a potential support build. Again, you got to see it happen, but I think that's the protocol you go through. Is you go through those watch lists and you have a conversation with yourself. What violated trend and pattern? Simply because you have a sell in the market doesn't mean trends and patterns were violated. Markets go up and down. Obviously, with a day like today where the market violates support, you're going to see a lot of sectors violate support. You're going to see a lot of stocks violate support as well. But you're also going to see scenarios like ADI that simply form a bullish retracement where you need a doji. You're going to see scenarios like Netflix where it causes some concern, but it hasn't technically violated support. Could it? Absolutely. Could it in the next 10 minutes? Absolutely. But it hasn't technically violated support as you're in that zone. And so it's more about the update. When you're looking at discretionary, yeah, discretionary is garbage now, right? Violation of everything. But I'm still looking at a Six Flags. I kind of like those reopening plays. Airlines, they held up really well today. Some of the underbelly held up fairly decently today. You take a look at Six Flags here, a stock on our option report over the or on our stock report over the weekend. Did it violate the trend and pattern? No, the market did. Six Flags didn't. We're still looking at that potential continuation breakout against the symmetrical triangle with the trigger above 43. And so I think what happens is you simply go through your watch list very methodically, you update it from a trend and a pattern perspective, and you reassess the situation. When you're looking at the more cyclical areas of the market, such as energy, basic materials, finance, and industrials, obviously you saw a couple downgrades out of basic materials and industrial. Both of them ranked left of 50 at tackle trading. When we're looking at the industrial sector, they got a negative 45 ranking right now. But you know what? I don't even need to say it. What's everybody looking at today?
A 200 period moving average on the gap down is sitting right on it.
Everybody and their dog's looking at that. Could that act as a support level?
Yeah, it could. It's not there yet, but it can absolutely be a catalyst down there.
And has the momentum shifted against the market a little bit?
Well, it's only down. What are we down? 2% on this one? Yeah, a little bit.
Well, just look at the daily candle.
The price action.
It's a small candle. Make it simple. So you could certainly see buyers coming in from an industrial perspective at the 200. But again, you have a lot of volatility coming down into that 200-day moving average. It's one of those scenarios on the industrial where it's like, yeah, we certainly could see the 200-day historically being a really good buyer situation. The question is, has it historically been that buyer situation? When you're looking at the 200-day moving average, a lot of neutrality covered, bounce. I want to say the evidence is compelling, but you do have some of it to a certain degree. So yeah, all sell day, but could the 200-day moving average? That's a question I think will be answered this week. I'm very interested in that 200-day moving average and whether or not it does form support or not. But officially, big downgrade in the industrial sector over the weekend. Now you're looking at a negative 45 ranking. The open question in industrial, can that 200-day moving average hold? When you're looking at energy here, energy had one of those moments yet again where it could have violated that 50 handle. It didn't. It broke back down. You saw the pain. It broke back down. You need to reassess the situation. This is back down into neutrality of absolutely nothingness. But am I still looking at an EOG that gapped down after a big upward movement in price and is now kissing off support? yeah, I think EOG is still in a scenario where you give it a couple days and you're looking at this from a support build perspective. So whereas EOG, we were looking at it from a continuation breakout scenario, things change. Update it. When you look at the picture now, you're looking at this as a bullish retracement. So we were looking at a trigger above 75.5. Now we're looking at the intraday levels start to form right there on the daily 50-day moving average, kissing up against an old breakout channel. That's compelling to me. That's interesting to me. But I think you got to see the selling stop first, right? And so I think you go through your watch list methodically and you simply update them from what maintain trend and pattern, what triggers need to be updated. What breakouts turned into retracements today. Retracements got blasted and no longer looking at retracements to a certain extent. When you're looking at some of the other sectors out there like basic materials. Basic materials, you've seen the downgrades over the last couple weeks of tackle trading. You also now looking at this as a violation of the 50, a violation of the 200. And again, volatility doesn't care about moving averages. That's why they hypothetically can become support. We're looking at those areas. Basic materials, gap down, sell down. Now you're just looking at where this pain can end in the material sector. But absolutely, you're some degree of bearish in the material sector right now. When you're looking at specialty chemicals, when you're looking at those metal mining companies, when you're looking at copper today, all of them showing recent spouts and volatility and all violating some degree of intermediate to major support levels. That's a certain degree of stay away outside of some gold value hunting. But from a specialty chemical perspective, take Lynn Holdings, for example. We might like 300, but you got to see 300 really form here.
You're going to need to see a pattern development for sure.
You got to see it really form here. You're not buying the dip here. You're buying with confirmation. When you look at Sherwin-Williams, SHW, again, double top, double bottom, violation of moving averages. The top of the market's selling down a little bit. The bottom of the market kind of stabilizing a little bit from a materials perspective. When you take a look at copper, /HG from the actual copper, it tested the 200-day moving average. But let's take our darling, FCX. Copper's kissing the 200. FCX not kissing the 200. Look at that gap down, sell down. Now, question is, we all love FCX. We love doing covered calls on FCX. Obviously, you're locking down risk graphs in FCX. But could $30? And again, this is just an open question I have this week. We need a lot of answers from the market this week. But here's one of them. FCX, can $30 play a role yet again? I think it can. But you got to see it.
You have to see it.
You got to see it.
Yeah.
This is not a buy the dip. You have to see buyers come back in. And so we're looking at these zones where historically they did, but are they going to do it again? That's why you got to see it. So materials a little bit as a stay away right now until you start to see those buyers come in from, and again, I'm talking from a bullish perspective. And then we already talked about the Dow Jones from an industrial perspective, the industrial sector itself, official ranking right there at that negative 45 handle as well. And then when you look at the defensive sectors here very quickly, you take a look at the REITs, real estate here, little gap down, stabilization happening around 46. Gap down, but it didn't sell down. A lot of the market gapped and sold here today. Real estate trying to find that support level around 46, but keep an eye on that one. Again, got to see a little bit of confirmation. When you're looking at the utility space, kind of the cousin to the real estate space, that's just been garbage for the last 2.5 weeks. I don't see anything different on this chart today that I saw on Friday, that I saw last week, that I saw the week before. I'm just seeing the continuation of the recent volatility in the utility space. That's a stay away for me in the short term. And then the last two sectors you're looking at, healthcare as well as consumer staples. Consumer staples, double top, double bottom, violation of the 50, violation of 71. And then you see the sell down. Where could support form? You could see it at 70, but again, that's a hypothetical. You're really looking at the 69, which is slightly north of that 200-day moving average. That does coincide with some fairly decent support level. $69 does make some sense to see those buyers come in at that level. But for right now, staples, again, sell down, gap down, sell down. Got to be a little bit of a stay away from the bullish swing trading perspective until you start to see A key word this week for us, guys. A very key word for us this week: stabilization. That's what it starts with. Stabilization. You got to see the volatility stabilize. You got to see stabilization come into the marketplace. And so if we start seeing that, word of the week at Tackle Trading, word of the week, stabilization. That's what everybody is waiting on. And again, stabilization, a little bit of the eye of the beholder. But for me, it is slowing momentum with support starting to build with consistent intraday analysis. That's what we're looking at to see this week. And we got a lot of news stories to go through this week. So it's going to be one of those weeks where it's like, all right, let's get going a little bit.
Mm-hmm. Show me that stabilization.
Patience.
I wrote it down. Word of the week.
Stabilization.
I like it.
And right now we don't have any of it.
On a Monday morning.
Right now we don't have any of it.
No, it's
but
not.
That's what we're wanting to see. And again, for me, it's about where is those levels that we could see that stabilization come in, that support level start to build from an intraday. Can it be 70 on staples? I don't know. Most likely the 200-day moving average here. But again, this is all about the hypothetical scenarios of where those support levels could build. And so when you're looking at this from I'll do something from a visual perspective. Okay. This is the areas on the chart where all of that could occur. That's your box.
Yeah.
That's your financial box.
Yep.
Okay. You guys ready?
Mm-hmm.
That's your real estate box.
That's a big box.
It's a big one.
It's a big one. Energy's got a nice little tight box.
Mm-hmm.
Look at that, 45. You could definitely see those buyers. Look at that over here. 45 got gobbled, guys. Gobbled up. 45 did. I'm looking at that level. When you're looking at utilities, hold on. Let me get you an accurate box on this one. There. I think that should tell you my opinion of utilities.
Utilities, yes.
Okay. Okay. Again, just visually painting the picture here.
Mm-hmm.
Okay. Visually painting the picture here.
Materials are needing to hold.
Oh,
that sector, yeah. Got a little box, yeah.
No one.
Yeah. The rest of them are not there yet. That's the difference. Right. They're just not there yet.
Uh-huh.
This is the industrial sector. It's one of the first ones that if the market does stabilize this week, you are looking at the industrial sector on that 200-day moving average, in my opinion. Healthcare, guys, if 130 breaks, it could get ugly in healthcare. No doubt.
Mm-hmm.
If 130 violates, you could see some pain here. And again, support could build anytime, guys. And a lot of this, guys, is the market's been fairly good this year.
Yeah.
When the market goes up a lot and you start violating support, there's just not a lot there. And so we're looking at an environment where you simply have to see support come in. And honestly, I would love to give you a more accurate response than it could happen at any moment because it's going to happen on the intraday chart.
Mm-hmm. I love the analysis there. And that visual you just went through, I think really does help us kind of understand exactly where these different sectors are. Going through them one at a time, Matt, was great there. Gino, by the way, who does the newsletter over at Tackle Trading each and every week. Gino, any thoughts on these market sectors before
I really enjoyed that, Matt. You summed up everything I could possibly say. On the newsletter, I pointed out a couple of things. There's certain sectors that really move the market and certain ones that don't, like materials and energy utilities don't really move the market, even if those sectors tank. So I track the ones looking for stabilization. Like you just did. What do you have on there? You have healthcare on there, right? So in the newsletter, just to sum it up, and Greg Holmesy and I, Old Money Holmes, we did a coaches show last Tuesday on what's considered a pullback versus bearish. And we're seeing a lot of charts that are bearish on the daily, but they're still looking good on the weekly. So when you look at healthcare, that doesn't look great on the daily. But when you look at the weekly, look at that. That's still intact. Like Matt said, that 130 20-day moving average is coming in right there.
And Gino, very quickly, that's why I drew it at 130. Right?
Yeah.
You can definitely see support coming in at 130 on healthcare. 100%. Yeah. That's the zone I believe traders and investors are looking at in this sector at 130, because that 20 weekly is right there at 130 as well. And so that's why I drew the box at 130. If 130 holds, I think we're all good here. I think we're fine.
Key sector. It's a big part of the market. It's like 12% of the S&P.
It's a massive sector.
So the biggest one is XLK. Now, when I look at XLK, same thing. You saw it there. It looks like it's really pulling back in the daily, like it's going to go bearish, but there's still room to hit that 20 there. It's still a deep pull. I'm calling it a deep pullback. I do want to buy it when it gets back above the 20 on a daily. And then semiconductors, Tim, I don't know if you did SMH.
150 on tech, if you want to give it a number like we did on healthcare, 130 on healthcare, 150 on tech from a sector perspective.
And these are the key sectors that led the market up: healthcare, tech, communications, semiconductors, and discretionary. If you put all those on there, they're all in the same weekly looking for support there. Sure. There's discretionary, I'm looking at those. That's the main sectors I'm looking at for, like what you said, looking for a footing, looking to grab hold on something. Gotcha. So excellent. That's the ones I'm looking at. Also, Tim, I wanted to point this out to you because you and I are crazy geeky option traders. I put this on this is interesting. I probably never see this hardly ever, but check out the VIX. Check out the VIX real quickly.
Let me guess, it's up.
Well, not only that.
Hold on. Let me guess, it's up over 20%.
Oh yeah, it's actually peaked above last. But here's the thing.
Oh, I haven't looked in the VIX in a year, and I still knew it was up over 20%.
Yeah.
Oh, okay.
Now here's the thing.
Let's do more VIX analysis.
Our VIX. Remember, you were saying there's a sell-off on Monday, and then it's the beginning day of the week. It's the first day of the week. Give the market a chance. We can't judge it on a Monday open, especially when it's not even halfway through, right? But last time the VIX spiked was when? Last month. And check out the Friday and Monday there. Right? Check out the month before that, and then check out the month before that. Notice they all spiked on Friday and Monday, which was option expiration.
Corresponding market pullbacks as well. Yeah.
See that? So that's the dashed line you're seeing on your chart there is expiration date Saturday. But look at June and July. June and July, we had the same thing. So we got that again this Friday. It's just this Monday was a little higher. Normally, not all the time, when the VIX spikes this high outside the Bollinger Band, we pull back. So there's a high odds we're going to find footing. Put that together with our support levels. I'm looking at Tuesday, Wednesday to see if this VIX drops back down. Buyers step in the market. It doesn't have to happen, but that's what happened. How many times in the past, Tim? 1, 2, 3, 4 times all around expiration day.
Sure.
So will this one hold? Very interesting when you see when did the VIX spike? Not just did it spike, but when did it spike?
Well, can I ask you guys a question on that?
Mm-hmm.
The protocols on something when volatility hits the market are pretty simple for us at this point.
Yeah.
Number one, long-term investments, you got to lock down those risk graphs down, correct?
Correct.
Okay. Whether that's aggressive with put options, which I think is personally, I'm just giving my personal opinion. When the market's pulling back between 2 and 5%, that's not portfolio insurance time.
Mm-hmm.
That's not, for me, it's not.
For me,
I know where you're going. That's sell cover calls.
That's right. That's exactly what I do.
Okay. And so when I say lock that risk graph down, man, it's all about when you're looking at that, for those of you who are not familiar with us at Tackle Trading, when you're looking at locking a risk graph down, let's take Disney, for example, right? You're looking at Disney, you see this neutrality here, right? You see that neutrality, you see the violation of the 200-day. You're not that concerned with Disney. Now, underneath 170, you might be that concerned with Disney to where you would buy a put option to maybe be a little bit more risk controlled. But anywhere between 186 and 170, you're just writing covered calls. And so when you're looking at locking a risk graph down, for example, let's say we own 100 shares of let me go to Disney here. Let's say we have 100 shares of Disney, just 100 shares of Disney here. We own 100 shares. Let's say we recently bought it at just 175, right? 175. If I could get my keypad to work, we bought it at 175. All right. So when you're looking at a risk profile, and traders love their risk profiles. What this looks like is basically as the market goes up, you make money. That's an open-ended risk graph, right? If you are aggressive in the market, you're very bullish in the market, you have very little concern, you want to make a lot of money, whatever that is, you like open-ended risk graphs. When confidence is high, you're in money-making mode, you like that open-ended risk graph. Disney can go up, 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 up. You like that. Well, the concern is not Disney. The concern right now is whether or not Disney cannot go up, but stabilize. That's the concern. And so what we want to do in times of concern is we want to give up some of this hypothetical gain,
possible gain,
to cover some of this loss. And so what traders will do in times of uncertainty and to those long-term investments, I'm not short-term trades, they'll just cut their loss and live to fight another day. But in those long-term investments, they're not going to get in and out every time the market pulls back 5%, guys. They're not going to micromanage that type of scenario when they're looking at Disney being into the great corporate war of 2035. What they're going to do is they're simply going to lock that risk graph down by coming out, say, 25 days from now, coming out and selling a nice little at-the-money call option, bringing in $390 of cash flow, and then all of a sudden, you see that risk graph locked down. Now, we're not looking to make money in this environment. You're looking to control money in this environment. So you basically write a covered call against your long-term assessment that locks the right side of risk graph down, but what it also does is it mitigates the loss to the downside. So for example, let's look at 170 without writing the call option. At 170, you're expected to lose on the 100 shares right around $500. Now you write that call option, you lock down the right side of the risk graph because you're not in money-making mode, you're in protection mode. You write that covered call, and at that same 170 price point, instead of losing 500, you've lost $250. You've now just mitigated 50% of the damage. And so when you're looking at the kind of that step one in moments of volatility, for me, I think it's locking down that risk graph, making sure that your long-term investments are stable. Just because the market isn't stable doesn't mean you can't be stable. And so you lock that risk graph down. That's what you do. I don't think you're in the environment where you say, I'm going to also lock that risk graph down. I'm going to take the cash flow and go spend a little bit on put option, and then you create a vastly different risk graph here. Now, don't get me wrong. This is a great risk graph in real moments of volatility, but I wouldn't call a 4 to 5% downward movement in price that. Historically, I wouldn't call it that.
No, I wouldn't call it that either, by the way. And when we're at 5% down, we need to see these intraday support levels hold. We got to see the chart patterns, adjust. And I love what you just said, the exact phrasing of it. I'm going to actually go back and listen to it word for word. You said that in moments of volatility, the market can be crazy. It doesn't mean you have to have volatility yourself. As long as you stay stable, something along those lines, Matt, that was a great thought. I appreciated that because that's exactly where all of our heads need to be right now. Adjusting watch list, adjusting risk graphs, locking things down, and managing our accounts. One last thing that we're going to do here today, guys, is actually a segment that we're, trying out here on a Monday. Actually, it's called Gino's Gems. And Gino is a veteran trader of the market's been around for 20 plus years, trading options and stock and equities and trading all kinds of different things. And Gino has just knowledge. He has a deep knowledge base, a vast knowledge base. He uses a lot of different tools. Gino, what you got for us today for Gino's Gems?
Yeah, if you want me to share my screen, it might be a little bit easier. Let me do that real quick. So
yeah, of course, you.
Yeah, that makes it a little bit easier to see. It's going to be short and quick. I'm going to try to keep these short and quick. You know how we get tough on tangent.
Can I explain something very quickly, guys?
Love to, yeah.
What we're going to do, guys, is we're going to bring Gino on every Monday. And at the end of the halftime report every Monday, Gino's going to do what is called the Gino Gem. And Gino Gems is Gino's quick hitters on using technology. We know technology can be a difficulty for many, many new traders, including all of us when we first started using Thinkorswim or Interactive Brokers or whatever softwares that we like to personally use. And so Gino's going to come on every Monday, and he's going to spend about 3 to 5 minutes just doing what we call a tackle short. And a tackle short is like Jedi options on Wednesdays. We're going to do a buy, hold, sell, but a fundamental review on Thursdays. Obviously we got Queen's Court, Frank's charts on Fridays, coming to you very, very soon. I'm so excited about this, Tim. I'm so excited. Matt's whiteboard.
Yeah.
Where I get to just draw charts and have some fun on a whiteboard. I'm so excited.
When does that start?
It's amazing. It's amazing. It truly is. I bought a whiteboard about a month and a half ago. I get a call every other day from an amazing woman here local who is at the storage facility. And she calls me up every 2 days. She's like, Matt, your whiteboard's just not here yet. Your whiteboard's. I'm like, you let me know when that thing arrives, right?
Supply chain disruptions.
Oh, I've gotten the spill. And every time, I'm not kidding. Every 2 days she calls.
Was it made by Nike?
She's like, Matt, I am so sorry. I'm like, there is no need to apologize to me. There are more needy people than my whiteboard right now. And she's like, you're the best customer of all time. I'm like, I know I am. I kid.
You built a relationship with
I do.
You're buddies now.
Listen, we are best friends. We are best friends. But our next tackle short is Gino's Gems. Every Monday, Gino's going to come on with a quick hitter on utilizing technology. And
quick little tips.
So excited. I am so excited at Gino telling these little short bits, technological gems over time. So Gino, with that said, take it over, my man.
All right. So I'm going to keep it under 2 minutes here, guys, to make it short and sweet because we have millions of these little tips. And like Matt said, this is brand new. So we're going to start off basic this week. All of us coaches at Tackle Trading have mentored, coached, and taught thousands of people if you group them all together. And one of the things we talk about is, managing your portfolio, these advanced strategies. But really, when it first starts out, it's amazing how when we get new students, even veteran students, that they're not real organized. And there's little shortcuts that really make your life easier. Some people call them life hacks, right? A lot of our students, since we're option traders, use a platform called Thinkorswim by TD Ameritrade. And we can show you tips and tricks in all of them. But one of the major ones I just want to show you that just really makes life easier. If you don't have this, it's a must-have. You have to add it to your software. As you can see here, I've got a couple portfolios. I split them up on purpose. But when you first open your brokerage, you have your place of trade. You got your stock symbol, your quantity, your mark. That's today's price. The change from yesterday, the prop loss open. You have all this stuff, right? Margin, whatever you have with your buying power. What it's missing, which is so essential to any level of trader, beginner, intermediate, or advanced, is you need to know the price you traded at. Yeah, you can click quantity and it'll tell you in here all this stuff, right? But it's so much easier if you just see right here where it says quantity and mark. I want to put my trade price between it right here. So to do that, I'm simply just going to hit the sprocket. And it's right here. I'm going to hit the sprocket. You have to do this on every portfolio. And I'm actually going to add two things here to make life easy. Trade. When you hit trade, you'll see trade price opens right here. You want to double click that or move it over to your columns of your set. I'm going to move this up right between quantity and mark. Another one, which I believe almost everybody should have, is notes. When you type in notes, you can move that over. Now, I've already added it because I didn't want to lose them. It's already been there. That's at the top. That's going to end up right next to my stock symbol. So when I hit OK here, watch what happens. There it is. There's my trade price here. Here's my notes. Now, what makes this so important is as you're managing your portfolio, you go, okay, I got 100 shares. That's the price I bought the stock at. This happens to be my current, this is my investment portfolio for dividends. For example, I'll hit Walmart here. Here's my trade price. I left click it. It tells me the date and time, the price I got it at, what have you. But also, if I go down here to, let's say, Verizon, when I hit trade price here, and what's another one I have? Iron Mountain. Here's Iron Mountain. I can see the quantity. I can see the date and time. I can see a whole bunch of things about it. That is my break even. That is my break even. That's where I know, okay, below that price, I better have a stop loss or protection. I have to make a decision. And then over here on notes, check this out on notes. You know, it already says in here, I typed this in, I already closed 4 covered calls for 600 credit. Verizon down here, I don't have any notes yet because I just added this, and so on and so forth. So that's how you add notes and trade price. It's very important where you place it up here, because when I'm reading left to right, if I want to add any notes, I can. I know my quantity, I know my trade price, I know today's price. So I can see the difference here, which shows you the profit and loss, all that kind of stuff. This is the change from yesterday. It's very, very big time saver to know, okay, where did I get in at? Now, that is the first thing. That's you know, add it. Finally, when you get down here to like an option trader, you can see it's in here, same place. Let me just open up 2 real quickly to show you how easy it is. Here's my notes on ConocoPhillips. Okay, I remember I covered call on here. When I hit trade price, I bought multiple prices. It cost averages for you. So I know my cost average right there. What's another one Matt was talking about? Okay, Disney. Disney, I have 200 shares. My trade price is right here. I have 2 different trades, 2 different dates. Okay, that's my break even of my 200 shares. Here's my individual prices down here. You can see that. Very helpful, especially if I dump a couple, you know, it'll cost average it. I hit my notes, support at 170, and I've already made 380 profit covering 2 covered calls. So all my notes are in there. Boom, I could go to the next position. I know I have a stop loss in here. My stop's at 173. Now look at this real quickly. Last point. Watch, this is my trade price, my break even. I want to know where my stop loss is, you know, how far below that. I just go like this. 173, 174. I might want to move my stop loss up to that for break even, but at least I know where my stop loss is, all because of a simple little thing. Why it's not in there, I don't know. And that is the tip, the first gem of the week, guys. There you go. Tell me what you think. That is Gino's Gems, making life easier with portfolio management on your monitor tab.
You know, honestly, Gino, little stuff like this is incredibly valuable for any trader. Organization, information, be able to assess it quickly, right. Understand what you have on your statements. Yeah, very, very good. Matt, any thoughts on that?
Gino was focusing quite a bit on stock, right? Trade price versus stop loss, all that. Having trade price on the monitor tab is very important for option traders as well, as you can quickly get into certain management techniques simply by applying the trade price versus net liquidation. And so like literally, if you just give me net liquidation versus trade price, and that's all I have as an option trader, from a cash flow perspective, I can tell you 50% of all management off the top of my head just based on those 2 numbers.
That is so important.
Because when you're talking about net liquidation value versus trade price is the cash flow you receive. Net liquidation is what is remaining. Well, if you've captured 75% of the original trade price, pull the trade. You know the management technique just based on trade price versus net liquidation. It doesn't tell you some of the other more subjective decisions we have to make from a trader's perspective, but I do believe that visual just trade price versus net liquidation as an option trader on the monitor tab is a very helpful tip. Thank you, Gino.
Yeah, I got that. That's a little more advanced. I got that on here, right here.
Yeah, it is, right? Because we're talking so I'm at selling 50%, options.
That's a bull put credit spread. Yeah, absolutely. Yeah, so why it's not on there? Most brokers it is. Really,
trade price is important. I agree.
Right.
Yeah, I like it. Hey, a gem right there for certain guys. If you're out there watching, hopefully you got a little tip right out of that and get some value out of it and adjust some of your position statements so you can read that trade price number very, very quickly. Let's move into final thoughts here on a Monday. Obviously, a lot to unpack that we've gone through here in the last hour and a half. Mark, you first. Programming notes. What do we got here to tackle today? What do people need to be aware of?
Lots going on at tackle. Onboarding. Monday's always a busy day for us, but it's a particularly busy with a special event, a cherry on top of what might be a long day, but I have no doubt my brother Matt will bring the energy tonight. Step system webinar right here on this YouTube channel. Matt breaks down technical analysis like a genuine, literal expert, and he does it in a way that is easy for you to understand. That is tonight at 8:30 Eastern. Before that, at 7 p.m. Eastern, Coach Frank is going to do his normal onboarding process where he walks people through the features of tackle trading right here on the YouTube channel. And for Dynasty investors, Coach Emily is going to be holding her lab tonight at a special time, 7:30 Eastern, in order to get done in time for Matt's step system swing trading webinar tonight. So
Absolutely.
a lot going on the schedule.
Yeah, if you're Team Tackle, make sure that you come and join us. It's going to be right here on the YouTube channel. I'll drop the link directly to where the video will be. As always, you can set a reminder for yourself. Maddie, final thoughts from you.
Oh, I look forward to dancing the technical two-step here tonight in a day of increasing volatility. There's no doubt about that. But you know what? You got to learn how to navigate downward movements in price the same way you would navigate upward movements in price. And so I'm looking forward to having a great time with Team Tackle later on this evening, teaching the basic concepts of swing trading as we utilize the STEP system, which is our swing trading system we utilize over there at tackletrading.com. So I'm looking forward to that, no doubt about that. And we will definitely bring the fire and have some fun and high energy. And Team Tackle would love all of you guys to join, or if you want to hit the replay, that's perfectly fine as well. But looking forward to hanging out tonight for about an hour and a half to talk a little technical analysis in Swing Trading 101 webinar presented by Tackle Trading.
Looking forward to it, guys. That's a can't miss event. We'll see everybody there live. I'll be there as well, kind of opening the show and talking to the team.
I don't know if Marty's coming today.
Marty is if there's
only if I can find a gif of Marty violating the tramp and breaking the floor and falling to China, elephant? Like only that.
Yeah.
Now Marty might not. I thought about it last night. I was like, how do I fit Marty in? I don't know if I can fit Marty in. I got a lot to talk about tonight.
There's going to be a lot to unpack. There's no doubt about it. Marty can always make an appearance just so we can smile at him.
I just might have Marty on the screen just as I'm talking. But, yeah.
There you go. All right, guys, have a wonderful rest of your day. We'll see you tonight at 8:30. Gino, great job today. Appreciate that. Yes. Jem, great job on the analysis today. Matt, appreciate that. And Mark as well.